And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and also tradershoppingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, September 12th, 2021. To pick up where we left off on Thursday, the markets did continue to decline, but not before rallying a little bit first. The decline started pretty much after the opening on Friday. So the initial response to the PPI figures, which showed a pretty large increase in producer price, in the inflation on the producer level, did increase more than expected, but the market put in a pretty valiant attempt to rally on that number. Now, as we have seen over the last couple of days in the NASDAQ, the market has attempted to rally and it's rejected. It rallies and it's rejected. Tried to rally and it's rejected. And each time it's rejected, it's dropping about twice as what it rallied. So we continue to see this rejection, which would be expected in the wave that appears to be forming here. So on an Elliott basis, I continue to track what I'm going to be labeling still as a minute fourth wave correction. And that's off of the all-time high right now, basis December, 15,699.75, but depending on the chart that I use, that'll slip up to be 15,709. Excuse me. So what we have thus far is we have A of 4, B of 4, and now we're in C of 4, which will be a 5-wave decline in and of itself. And we are in wave 1 here, wave 2 there, excuse me. And then wave 3 is still underway. Within wave 3, we have 1 of 3, 2 of 3, 3 of 3, and what appears to be a small 4th wave as we come into the globex session, which started about 50 minutes ago. Excuse me. Got a little bit going on in my throat here today. Now, what can we be expecting from here? An additional decline, not that big so far, but you never know. I'd be looking for it to at least come down below 15,004. Come on, tell me what it is. You're really being hard. 15,422, which is the bottom of, or the lows that we saw on Friday afternoon. And that'll put in wave 5 of 3. Then we'll get an additional 4th wave bounce, which will probably bring us back up to these levels, or wherever this smaller 4th wave completes. I'd be looking for it to get up a little bit more, maybe up towards the hourly 8, and then decline again. And so that it once again will show us decline, rejection, rally, rejection, rally, rejection, rally, rejection. So we got a couple more of those to do before wave C is complete. Now here's some of the problems. We have that no break zone at 15,397. It remains at 15,397. That does not give a whole lot of room to additional downside. If we're going to get up, come down, go up, and come down, I really do not want to see it drop below 15,400. So while we may get down to 15,378 or 15,360 to complete this C wave, it's going to knock the count out of whack. And if it does that, then we're going to be back to where this high completed all of our upward sequences. Minute 5, minor 5, intermediate 5, primary 5, cycle 5. We can go one higher, completes a supercycle wave 3. And then I am looking for more acceleration to the downside. Now, what goes against that taking place is this initial drop here. If it has to be turned into a wave 1, and this is a wave 2 of whatever's coming off, and then we have the 3rd wave forming, it's going to produce a little bit of a troubling point coming off here. Not that it's impossible, but it's going to be a little bit troubling. So for right now, I'm going to count on the NASDAQ, or I'm going to be leaning towards the NASDAQ not breaking this level. Or if it does break this level, then I'm going to maybe switch everything around to where it's forming a diagonal triangle higher. And that just doesn't appear to be the case right now, but it could be. It could form it in wave 5. But that does not give the market permission to break below wave 1, because then it still violates a major no break rule under Elliott. And that is a fourth wave cannot overlap the price territory of wave 1. Because at that point, it is correcting all of wave 3. And a fourth wave is not expected to do that. It is much different than a wave 2 correction coming down and equaling a wave 1, coming all the way back to the starting point of wave 1, and then blasting off in the C wave. Now, if it does happen and we start to rally intensely again, then adjustments can be made. I'd be coming back and I'd be looking at all of this to see, could that wave 1 come in lower? And all of this happen. So, but I don't know how much lower I can really bring it in. Maybe down to 15,382. But that's pretty much about it, in all honesty. I don't see how wave 1 could really be shortened any more than that because of the individual structures. But we'll see. Let's let the market tell us. So for tomorrow, I am thinking we will see some additional rejections of rallies, but I don't think they're going to be as intense as we saw on Thursday and Friday of last week. If they do turn around and are as intense as Thursday and Friday, and we start to break this level and the intensity picks up, well, then we're pretty much getting the message from the market that that was it. We're now going down. We're now going to get out of positions and head it down. This kind of also leans towards, now this is a momentum indicator, stochastic momentum. So in all fairness, it's just showing that the momentum may be waning to the downside. I don't necessarily need to see this thing jump all the way back up to where the strength is in the buy side when I'm considering that I'm still considering additional downside. So I'm not going to rely on this. I'm going to rely on the chart pattern. I'm going to rely on the market to tell me. So tomorrow, additional rally, decline, completes wave 3 of C, an additional bounce higher in an ABC pattern, up, down, up, could be flat, could be zigzag. I'm basically looking for zigzag at this point. Maybe back up here to the hourly 8, and then a fifth wave down. Fifth wave down should take out that low at 15,425. But I don't want to see it below 15,400 or 397. So a lot remains at stake. It could come down 10 points, 20 points below 422. Certainly can. But let's, again, I'm not going to be hanging my hat on it, hanging my hopes on it. I have to allow the market's going to do what it wants to do, and we must be able to step in and trade that without considering, oh, it's breaking. What we do need to realize is if it does break it and it accelerates, then the market is telling you what's up. And that is going to be that everything is now turning more negative. And there's a lot more weakness in the market. Again, we're already below the 200, the 50. The 50 is, if it continues to slide with any intensity, the 50 will drop below the 200. The 20 is already below the 200. So you can see it's already happened. That 50 just slid down as I pointed at it. So once it gets below, then it is totally on the hourly chart lined up to go down. And we can just take this thing lower and you're going to find, let me take it down to the 15, forget the 30, the 15 is already there. 200, 50, 20, 8, 4. They're all looking to go down. So this is already in play. this pretty much looks complete already. A, B, C, little ABC up, come back down, drift below 22, rally again. That's what we're going to look for right now. But you can see on the 15th, these are pretty intense slides. So that's the pattern. That's what's kind of happening. But we're going to allow the market to tell us. So again, for tomorrow, I'm looking for a rally, rejection to complete a C wave. A break below here gives stronger support to the highs being in, and I definitely will be looking for some additional acceleration lower. And that acceleration may happen on a break below 15,400. It may happen on below 15,378, but I would be expecting acceleration to really start to pick up, because if I have to count 1, 2, then this is 1, 2, 3, 4, 5, a 3, 4, 5. So, instead of being the end of a C wave, we have just this third finishing. So 1, 2, wave 1 of 3, wave 2 of 3, wave 3 of 3, wave 4 of 3, 5 of 3. Going to be big. So those are the options that we're looking at right now. Those are the most probable scenarios that we're looking at right now. Again, trade accordingly. Use your moving averages. If you're going to come down, and we're going to be looking at these smaller term charts in terms of a 1 minute, a 2 minute, and a 5 minute, then we have to be looking at the position of our moving averages. Right now, here we are again. On the 1 minute, it is already futzing around with the 200. It's coming up and it's meeting the 200, and the 50 is pointing higher. The 4 and the 8 are kind of in the 20. They're all kind of pointing higher, but that's on a 1 minute chart. We know that can change in a heartbeat because it's a 1 minute chart. Here again, we have the 200, we've got the 50. Kind of comes across the 50, 50 starts to turn up. That kind of, at least on a 2 minute basis, to the 5 minute basis, 5 minute can get up to 50 and that be it. Then it swings back down. Now, if this indeed is going to be the low at 422, I would think that we just keep rallying, but I don't think that that's going to be the case based on the hourly chart. So this is where I'm going to leave it for right now. And our next update will be Monday, the 13th.